Hey guys, Marty with Options Unleashed, and we got an interesting play on GameStop from Jon Nagarian tonight. It looks like an interesting one. Let's cover this. I'm sure there's lots of interest in this. Please subscribe, hit that notification button. I was actually interested in this trade when I saw it come across Twitter. First of all, big fan of Jon Nagarian, Pete Nagarian, Nagarian Brothers, what you guys do, the Fast Money Show, Options Action, all that stuff. Let's get into this trade. Let's figure out what John's trying to target here. At first, I was like, what? And I got to look at this trade. But then I was like, wow, this actually has legs, John. Congratulations. I like this trade. Let's figure out what he's trying to do here. And if you guys have any comments or suggestions, please let me know in the comments. I might have something wrong. Or John, shout out to you. If you think that anything misquoted here, please give me a shout out on Twitter or YouTube. Let's get into it. GameStop, another day up move today, up $71. And what John's trying to do here, he's trying to create a trade for April and for the April 16th expiration, as well as the March expiration time, trying to take advantage of that, of the also the earnings play that's coming in, right? So if we take a look at GameStop on the TOS platform, we got earnings on 325. So what John's trying to do is trying to create something that happens before 325, but just in case he misses it, he's got earnings after 325, so he's targeting both of those dates. So let's take a look at the IV rank. This is what makes trading options, especially trying to play it to the downside, extremely hard. The implied volatility, we have 600% in January. February's 500%. If you're looking at the March, you still have an implied volatility at 300% plus. So these option premiums, if you take a look at these for March, these option premiums are extremely expensive, guys. Even if you were to try to target down at the $10 level, you're still paying 66 cents in March. It's ridiculous. I have a limit order for April, but I actually like John's trade better, and let's take a look at why. Okay, so let's take a look at what John's trying to do here. Very interesting play that John's trying to do. It could be a little complicated for you guys that don't, and even for me at first, I had to look at the dates and the expirations. Um, you have to understand how kind of like a calendar works. But basically, what he's targeting here is he's going ahead and buying premium, very expensive play here, because he wants to be involved in the April 60 puts. That's after earnings. So he's targeting that. He's targeting a move down after earnings. And then what he's doing to offset that is he's selling the March 50 put for $13 against that, effectively creating what's called a calendar or a diagonal. And so what he's doing is he's kind of offsetting that premium. So you can see the curve here, profit potential given the move down. If we have that big gamma move down, which is that acceleration of delta, this trade's going to be extremely profitable extremely quickly. And then note, because he sold premium, his decay in that magenta line, sorry, the cyan was the profit potential. The magenta line is the actual, and you can see that the decay here, the theta decay is very gradual in this trade. And I'm going quick here, so I apologize. And then what he did, interesting, to try to offset all this premium up here in case that it runs up against him, what he's doing here is he's actually saying, I want to actually now go ahead and just sell a put spread. He sold the 30-40 put spread for April after earnings, trying to collect that $5.85 to offset the cost of the other trade, which is roughly, $8. So all in all, if you look at the combined trade, John's got an amazing trade here. If you take a look at this magenta line, This is the actual, theta decay, and basically the Black-Scholes algorithm will tell you what your profit P&L would be, every day here. But you see here, there's very low risk to the upside because John can actually just take those puts off at any time. They're actually not going to go to zero right away, so he can take those puts off and he can actually just collect money on the trade if he thinks it's going against him. But if it moves down, he can actually start to scale out of these 60 puts as well, and just take a profit on the trade. And what John's doing interesting here that I thought, and we'll get to the chart in a second, but what he's doing here is he's saying that he doesn't think the stock is going to go below $40 by that April earnings. And let's take a look at the chart now for a second. What John's saying is that he doesn't think that for April the stock is going to get below that $40. So he's kind of targeting that last big candle move up, and he's saying that this is probably a good area of support in here, especially for earnings, given that GameStop's probably doing a little better. If we were to draw some trend lines in here, John's looking at this area in here, targeting that 20-day moving average around 40. Not a bad idea. I kind of like it, actually. What I was worried about when I was looking at this, I see this thing setting up for a major failure at some point when all the hype is over. But it might be a slow degrade. If this is another Kodak or another 3D Systems, back a couple years ago, you can quickly see this thing come back down to, I was thinking targeting that 22 level. So that's the only thing that I would be careful about, is I was looking at the 22 puts. Now, let's take a look just at for ha-has. So putting this all together though, take a look at this Analyze tab in Thinkorswim where John is targeting. He's got a huge profit potential in here all the way. If you could just consider getting the second derivative of the curve, he can get out of this trade at around $90 or $100 for a nice profit. This is about a $4 trade that can net you. It's a 1-to-1 at 50% of profit, max profit. It's about a 1-to-1 trade, but he's got very low downside risk in this trade, given all the hype around it. So I actually really like this trade. But just for ha-has, let's just undo all that. Let's just take a look at the, if you're targeting, let's say before earnings, you think there's going to be a washout, you can target that $21 level. But look, again, it's $3.20. It's really extremely expensive. So there's really not much you can do here. The only thing you can do is try to maybe, when you buy that put, maybe offset it with selling a downside sell to make it a put spread. Just make it a little cheaper, but it's still going to be a very expensive trade, regardless. So this, if you take a look at the equivalent of this, where you're buying the 21, but you're selling the $10 against it, targeting that $21 move that we were talking about. You can do it this way. You can express it as a debit spread move, and this would be $2. You would be spending $2 for this trade. If we cranked it up to about the equivalent of what John's trade is at, about $5, I think, you're targeting about a $9 move here for profit, and John's trade is around the it's around the $12 range. So I think John's trade is still a better trade. The only thing you have to worry about here is you have to make sure you get these trades off. So you probably want to, you want to make sure your trades kind of go together here. You want to make sure you sell that put spread maybe for protection, and get that in there. And if the stock moves up, maybe consider then buying. Sell the put spread, then go ahead and sell the premium, but the premium is going to cost you. So you're going to have to sell that put spread first, but then maybe if the stock moves up, go ahead and create that um, calendar diagonal, if you will, to round out the trade. So that's about it. I actually think it's a great trade. I might try to put this on. I have the advantage of the stock is a little higher going into tomorrow, and who knows, the thing could fall apart. Once you see that big candle move, that bearish engulfing candle, I would say it's all over for GameStop. So, but for now, you kind of have to ride it. And the way we kind of look at it, guys, is when we play around with an option trade, and you know that IV rank is extremely high, the only thing you can do right now, in my opinion, is, and this is my opinion only. I'm not a broker. I'm not trying to sell you advice or seller securities. This is all my opinion, so take it for what it's worth. But what we normally do is we try to make sure that you're trading this on a technical basis. There's no more fundamentals, right? With this stock, you're purely trading this on technicals. You can look at the 5-minute chart. You can look at the whatever chart you want to look at, but it's all technicals in here. It's all technicals all the time on stuff like this. You can target the MACD. You can target the RSI below 50. But at some point, you're looking for this break and trend. And once you have this break and trend in here, then you can start to play around with it. But ultimately, you're going to be looking for that bearish engulfing pattern in here. And once you get that, it's lights out for GameStop. And what John's trying to target is, he's saying there's support down in here at this level, at the 40 level. And even if it doesn't, he's got plenty of room. He's got room all the way down to, once it gets to 40, and it can get there quickly. If he's targeting that March, he's making money all the way down to 37. He doesn't even have to worry at that point. So this is just a great trade all around. Congrats, John. At first I was like, I really didn't understand the mechanics of this, but then I had to look at it and see the actual Greeks at play. And this was a fantastic way to play GameStop. Again, the only way you can get hurt on this is if that crazy ride continues for another several weeks. Even then, John's got some theta decay on his side. It's really not going to hurt him, but he's got plenty of time to maybe even do another set of contracts and even target maybe another area. Maybe you would target the 60 area. But all in all, I kind of like that 40 area in here. It's kind of a good idea. I'm actually thinking that 21 area is ultimately where this thing goes later in the year. But it might see one of the Nikola things where it's doing one of these. So John's got all day to get out of that trade. So hope you liked the video, guys. And John, hats out to you and Pete and the team. Good job on your trade. And we'll watch this one together. Thanks again, guys. Please subscribe and hit that notification and leave me some comments. Take care.